Good morning, everyone. Welcome to this week's Financial Weekly Review. In the global financial markets last week, we witnessed a fierce tussle between the accelerating expansion of the real economy and the repair of capital market expectations. The US ISM Manufacturing PMI for May came in at 54.0, hitting its highest level since May 2022 and signaling that the economy is accelerating at its fastest pace in 4 years. However, the subsequent non-farm payrolls report registered an increase of 172,000, far exceeding market expectations, which directly dampened the market's anticipation of an imminent rate cut by the Federal Reserve. In tech stocks, the AI trade, which had been rocketing ahead over the past few months, hit its first real speed bump last week. Although Broadcom's AI chip revenue surged 143% year-on-year, and Hewlett-Packard Enterprise (HPE) delivered record AI server orders, capital collectively chose to take profits after the positive earnings materialized, as market expectations had been driven too high previously. Semiconductor giants such as Broadcom, AMD, and Micron Technology all came under pressure, dragging the Nasdaq Composite down from its historic highs. The market is transitioning from a blind frenzy to a more rational exchange of chips. The commodities market revolved closely around the evolution of the situation in the Middle East. As US-Iran negotiations released positive signals, the energy market, which had previously carried a premium due to the tightening situation in the Strait of Hormuz, experienced a sharp retracement. Brent crude oil fell sharply over the past week, with a cumulative retracement of nearly 20% from its April high. This has greatly eased the global pressure of input inflation and has also given the bond market, which has suffered from interest rate hikes, its best week of performance in months. Turning our attention to China. Last week, the plan for further deepening the reform of state-owned enterprises was officially issued. Standing committees of provincial party committees across China have followed up intensively, and the curtain is slowly rising on a new round of industrial restructuring, mergers, and acquisitions aimed at making state-owned enterprises better and newer. In addition, China's National Healthcare Security Administration released the 2026 National Reimbursement Drug List Adjustment Plan. The online application portal was officially opened on June 1st. This adjustment introduces a pre-application mechanism for the first time, aiming to further shorten the admission cycle for innovative drugs to enter the medical insurance list and release the innovation dividend of the industry. Looking ahead to this week, the market will welcome key data such as China's foreign exchange reserves for May. The technological innovations from NVIDIA's GTC conference and Apple's Worldwide Developers Conference, WWDC, will also continue to affect the nerves of global tech stocks. At a time when the macroeconomy remains resilient but valuation sentiment faces repair, maintaining a moderately balanced portfolio and focusing on dividends and new quality productive forces may be a prudent choice in the current volatile market. Thank you for watching and see you next time.